Can I use my VA home loan benefit with my girlfriend? Let's talk about that today on Major Money Matters. Welcome to Major Money Matters. My name is Major. I'm the host of Major Money Matters. And if this is your first time coming across the channel, I want to invite you to like and subscribe, forward this video to someone who you think it could help as they're trying to get into their home search. We also post videos here every single week to tell you about what's going on in the market and how factors are affecting, how economic factors are affecting home searches and things like that. So be sure to follow the channel to get that weekly market update on economics and how the housing market is going. So today I want to talk about something that's very interesting, and it's actually one of the most common questions I get surrounding the VA home loan benefit. Can I use my VA home loan benefit with my girlfriend or boyfriend or mom or dad? Can we combine our incomes so that we could purchase a home and still use a VA home loan, so I get all the benefits of the VA home loan, 100% financing and stuff like that, lower interest rates than conventional rates? How can I combine it and make this happen? So I want to step through some things and tell you what is allowed, what is not allowed, and why, okay? So first thing you need to know is in 1944, the VA home loan benefit was constructed or passed into law as part of the Servicemen's Readjustment Act from after World War II. It was intended to get veterans into home ownership and kind of stimulate the economy. Now, at the time, the government guaranteed $2,000 of the home loan for private lenders to give. Also note that the VA does not directly give loans. If you hear somebody say, I got a loan from the VA, really they did not. The VA does not give home loans. The VA guarantees home loans for private lenders or private banks to give to veterans. So the VA does not actually give home loans. So the VA said, hey, we're going to guarantee $2,000 of this purchase for the benefit of the veteran. Now, at the time, the average purchase on a home was about $8,600, $8,600. But after World War II, inflation started to go up, homes prices started to go up. And so eventually the government said, hey, we're going to guarantee 1/4 of the purchase. So on the VA home loan, we guarantee 1/4 of the purchase so that the lenders are enticed to give VA home loans. So even if the veteran defaults, the lender is going to get 1/4 of that money back, so it gives them a better opportunity and reduces the risk for them to get that money. That's why the interest rates are lower on VA home loans, because the risk is lower on VA home loans. Okay, so let's talk about that. So what can you do with your VA home loan? All right, so if you are a veteran alone, if you're a veteran alone and you're buying a house, you can buy a property if you alone are financing that property. Now, if you are a veteran and a spouse, you also can finance that property at 100%. All right, 100% financing. You can do that if you're a veteran alone or a veteran and a spouse. Okay, and this is a married spouse. This is not common law married. This is you have a marriage certificate spouse. Okay, all right. So I run into some of those situations too, where people believe they're married because they're common law married, and that does not count. Okay, it is just if you are actually married. Now, outside of that, things start to get a little dicey, but you know, the other caveat is if you are a veteran and a veteran. Let's say you are unmarried, veteran and veteran. You're veteran and veteran, unmarried, you can finance at 100%. Now, that situation requires a manual underwrite from the VA. Therefore, once you get the underwriting, the conditions cleared by the lender, it also has to go off to the VA to make sure this is actually legit and everything is done. But you need to add, in my experience, you need to add another 7 to 10 days to your escrow period in order to get this done. So it's not as fast, it's not as efficient, not as smooth, but you can do it if you're a veteran and a veteran that are unmarried. Now, if you're a veteran and a non-veteran, unmarried, okay? Unmarried veteran and a non-veteran. Recall at the beginning of this, I said the VA guarantees 1/4 of the purchase for the benefit of the bank. So if you're a veteran and a non-veteran unmarried, the VA says, wait a minute, we're not guaranteeing the non-veterans portion. So therefore, on a VA loan, for the non-veterans portion, you have to put 12.5% down. That's 1/2 of 1/4, which is 1/8. You have to put 12.5% down on that purchase, okay? So if you are a non-veteran, if you are a veteran and a non-veteran, you do have to put 12.5% down. People ask me all the time, Major, well, if I'm putting 12.5% down and I want to minimize my down payment, well, shouldn't I go with a different loan product? Potentially, yes, okay? If you are going with a VA loan, and you're already planning to put down 20% or 15% or what have you, you're already planning to put down a down payment, sure, maybe you still stay VA and maybe you still go veteran and non-veteran on that. But if you maybe are not planning to put down a large down payment, maybe you should look at a conventional loan, 3% down, first-time home buyer, or 5% down if you're not a first-time home buyer, to minimize your down payment. Maybe you do that. And you look at those other options also. That's why you need to have a trusted mortgage professional who understands these things and able to walk you through this and figure out what is best for you. So understand this applies to girlfriend, boyfriend. This also applies to mom and dad or friend or whatever. If you want to combine those incomes, you have to look out for whether you're a veteran and a non-veteran, because you are going to require a down payment when you do that. So that's it for this time. Thanks for joining us. See you next time on Major Money Matters.